Here are a few snippets of things creating a little bit of momentum in the markets today. The Japanese yen extending losses this morning after a surprise drop in factory production. Got people worried that this recovery, if you can call it that, is going to stall further. U.S. stocks up for the first time in 4 days. A surge in oil prices raising the outlook for big oil. Bangkok Bank says earnings are going to stabilize this year despite slower credit demand. Yeah, there's Bangkok Bank. BBL there. And let's take another look at the markets and see what's in play today, where the momentum is and where the money is and where it is not. Pull up the Nikkei, the Kospi, and the others. We're all in the money with the exception of the New Zealand market there. Some of their dairy and cheese producers going through some angst because of the still high level of the Kiwi dollar. Our colorful focus on the Kingdom of Thailand continues on this Thursday. Thai stocks gained traction yesterday after HSBC upped their call on the market, saying it is cheap. The SET barometer tacking on a few points. Market breadth decidedly positive, with winners outgunning losers by an 8-5 margin. The Asian regional strategist at HSBC says at 11 times forward earnings for 07, the market is the cheapest among the Asian markets. Haslinda is our point person in Bangkok, and she's standing by with our next guest, Doug Barnett, president of Quest Management. Haslinda, morning.
Hey, good morning. Now, investors are counting on the upcoming elections for a turnaround in the Thai market, which is pretty much lagging behind Asian markets as well, Bernie. Now, our next guest says that he's not concerned about who will win at the polls because everybody is pro-business. Doug, good to have you with us. Now,
nice to be here.
It doesn't matter who comes to power, but surely the policies that they implement would count.
Well, I think every major political party has seen that the policies that Thaksin pursued in terms of populist strategy and trying to provide benefits to the lowest rungs of society has been very popular. So anybody who comes is going to continue those policies. And also, in terms of stimulating the economy, Thaksin was very good at getting the government to get the ball rolling, and I think that type of policy will also continue.
Now, traditionally, in the lead up to an election, there's been a 15% increase in the Thai stock market. Do you expect that to continue?
Yeah, sure, because Thailand is a money politics type of society, and the way people get votes is by, paying their constituents, and some of that money flows into all kinds of assets and particularly into the stock market.
Valuations are cheap despite the political uncertainty. You say that it's a buying opportunity. What have you been buying?
Well, our three largest positions right now are Banpu Coal, which we think will have EPS growth of about 40% this year, maybe even better, and it's trading on about 7.5, 8 times PE. Taurus and Thai, which is about 4 times PE, and they're in the shipping business and benefiting from higher shipping rates, as well as next month their subsidiary Mermaid, which does offshore oil services, will get listed. And that looks like a big catalyst to the stock moving up. Right now it's not only one of the cheapest stocks in Thailand, but also one of the cheapest shipping stocks in the world. And finally, Bank of Ayutthaya, which was just recently taken over by General Electric. So that marries General Electric's strong credit controls and marketing expertise with 550 branches of Bank of Ayutthaya and a clean balance sheet. So that looks very interesting as well.
Doug, Bernie in Hong Kong, if I could jump in here with sort of an external, outside going in kind of perspective. Obviously, it's the politics that dominate the headlines, which have kind of given the whole economy a bit of a bad name. When it comes to like foreign investment restrictions, when it comes to policy flip-flops and backtracking and all that, are those days over, or is there a potential that in the lead up to the election the military government could pull a few more fast ones that could derail one or two more industries? Is that a concern? Is that why you're actually not all over the market, but actually very focused on, say, 10 or 12 stocks?
Well, I think, you know, if you had invested broadly in the Thai market since 1990, when I got here, you would have lost 40% of your assets. So the idea in Thailand, and I think in every market, is to find the cheapest stocks that are, you know, have the best management teams and the best earnings growth, and that's what we continue to do. And, you know, I think I can tell you that politics doesn't matter, because in 17 years we've had like a 92% depression in 97, 98. We've had 2+100% markets, and we've had a bloody massacre. We've had, I think, 7 different regimes, and through it all we've focused on is earnings. And by focusing on the earnings of the companies, we've been able to deliver about 20% alpha over the market. So I think that continues to be the case. And on top of that, you have a number of macroeconomic positives right now, because the Bank of Thailand is committed to cutting interest rates until they see the Thai baht weaken against other Asian currencies. That's very good for stocks. In addition, oil prices this year are flat to down from last year. We have the start of infrastructure spending, which started this month or maybe next month, which has a big multiplier effect in the economy. Plus we have this election rally, which was referred to earlier. So I think there's a number of reasons structurally that the general market is going to go up, and the most important being that the Thai market is cheap, not only on an absolute basis, about, according to Bloomberg, of course, 11 times PE with 19% EPS growth this year, but also relative to other Asian markets. The next cheapest market is Indonesia, and we'd have to have a 37% rally just to get in line with the next cheapest market. And the average Asian market, you'd have to have an 88% rally just to get in line with the average. So I think the market is cheap, and there's a number of structural reasons that the market's going to go up.
Now, if you take a look at volume, it's pretty encouraging. It's back to pre-crisis level. What do you make of it? Are retail investors back?
No. This is the big thing that's missing right now, and you'll see retail jump in a strong way before the election. Typically, in a very depressed market, retail will be about 55 to 60% of total volume. Right now, they're just up from 45%, so they were extremely bearish. But in an excited market, they can be up to 85% of volume, and that's really what drives valuations.
All right.
We're looking for them to jump in a big way.
Doug Barnett, we have to leave it there for the moment.
Okay,
Bernie,
thank you.
We're handing it back to you.
Okay. 11 times earnings. Don't give it a miss, say some, including HSBC and others. And of course, our thanks to Doug there from Quest. And Haslinda will continue coverage from Thailand. And in just a moment, we're going to talk about what's going on with the currency markets. The yen getting a little bit of a bang on top of the head after that weaker than expected industrial output figure. And I guess we'll ask Guyman about the Kiwi as well. We'll be back.
Some think startup. We think IPO. Some think competition. We think partnership. Some think successful business. We think wealth protection. Whatever your vision, we seek new perspectives to make it a reality.
Japan's businesses